Do you know your market share though? Because it's really difficult to find out this independent data. Do you know where you rank actually?
Well, it depends what you define market share, right? How long is a piece of string? I think from our perspective, again, we're clear on the market segment that we are targeting, and we've identified that.
Do you have a target though? Like, what is do you want to double your assets under management within a certain period? What's your KPI for this important segment? I'm Wong Shao Ning, and this is The Breakfast Grille. Banks are seen as a barometer of the economy and an indicator of the health of consumers and businesses. Is Malaysia's outlook then positive, or are there headwinds? And how does a bank navigate this in a very competitive environment with a fight for fee income and net interest margin compression? Questions we pose to a bank that has been operating in this country for 140 years. Dato Omar Siddiq, CEO of HSBC Malaysia, joins us. Good morning, Omar. Thanks for coming in. I know you're busy man, but let's talk about financials first, because profit before tax increased by 28.4% last year to 1.87 billion thanks to higher net interest income and strong performance from Islamic banking. I already see for the first quarter profit before tax is also up 32% to 584 million. Are the indications there already that 2024 will be a stellar year for the bank?
Good morning, Shao-Ning. First of all, thank you for having me on the show. And also I wanted to extend my congratulations to BFM for a wonderful sort of run after 16 years, continuing to be Malaysia's only independent radio station that does very well.
Well, we hope to go nationwide, and I hope somebody's listening. But yes, please continue.
Absolutely. Thank you for the question. I think in terms of numbers, you're right. I think HSBC has in Malaysia been relatively successful this past few years. I think 2023 was a stellar year for you, as you put it, and it was our record year. I think it was the highest ever PBT since our last record year in 2012. So that shows the progress we've made in 2023. And as you say, 2024, it looks to be good. We're strengthening in terms of our reach with our customers. We're also benefiting obviously from the global economy and also the Malaysian economy within certain segments. Government policy has been very, very conducive. So we do feel sort of very optimistic for this year.
Okay, so what is actually really going to drive this? Because I think net interest margins likely to stay flat, because there's going to be, I think most economists don't expect any change to the Bank Negara policy rate. But there still remains for some banks at least, you can see them fighting for deposit and loans. So is that impacting you all?
The wonderful thing about the HSBC franchise in Malaysia is that we have this reach with a lot of our customers, such that I think there's a lot of trust with us as a bank. As a result, I think our deposit base is relatively strong. And within that, the proportion of CASA is also relatively strong, in contrast to some of the other banks in the Malaysian industry.
Yeah, I see it hovering at around 58% of customer deposit base, right?
That's right.
Can it be even higher though?
Well, I think at the end of the day, for us, the critical thing here is to ensure that we're doing right by customers. So always meeting the customer's needs, that's a key thing that we believe in. So we don't go out in particular looking to sort of build up CASA for its own sake. It really stems from what's right for the customer. Coming back to the point, I think in respect of NIM, given what we see in the industry, I think it's less of an issue for HSBC. Again, I think we pay a lot of attention to our customers and tailoring the right products for them on the revenue side, and then balancing that against the cost side, which is our deposit base. We are able, I think, to navigate this relatively well. And the other thing I think we bring to bear is our international connectivity and our global sort of suite of products that seems to be relevant with a lot of the customers in Malaysia. Okay,
I'm going to come back to that, but let's talk about loans, right? Because I did notice from 2019, HSBC Malaysia did have a bit of a shrinking loan portfolio, albeit there is an increase in the first quarter. But is the bank still on a risk-off mode, and what precipitated that prudent outlook, which I notice is most obvious in construction and real estate?
That's a fair observation based on the numbers. I think with respect to HSBC in Malaysia, we've been here 140 years. So we very much are tied to the country. We believe in the growth of the country, and we try to mirror that. Obviously, we balance that against our own portfolio management, our own risk appetite.
Yes.
So I think in the mid-2000s, we were going through 2010 to 2020, we were going through globally a few sort of portfolio adjustments driven by regulatory requirements and so on and so forth. And I think we saw that portfolio rebalancing being carried out. But I think as you see now, in the last couple of years, for example, we have sort of gotten through that phase, and we're very much committed to growing the balance sheet once again, judiciously and safely, consistent with our core beliefs, to ensure that we're continuously supporting Malaysian companies and international companies that wish to grow, as well as, of course, on the retail side as well.
Okay, but did this then mean that the bank was not earning as much as it could? I mean, if you look at 2022, and this is from a RAM report, the loans to deposit ratio was 66% versus the likes of your closest competitors, UOB at 93%, OCBC was 92%. Omar, what does this mean about HSBC?
No, I think that's a fair observation and a fair call out. But again, with HSBC, I come back to that point. I think we are a long-term player generally. I think the group has been in place since the 1860s, and we've been in the country since 1884. So we take a long view of life. And it's not always about trying to maximize certain ratios or what have you in a particular quarter or particular year. It is about navigating and stewarding the company, the bank in particular, so that we are able to position ourselves for the long term.
Okay.
Right?
So, but now the focus is on loan expansion again, right? Does it matter whether it's retail or non-retail segments? What are you growing?
Again, I think the focus is really about our customers, and where we see today there is a lot of demand in respect of the corporates, especially around regional and global businesses. But also on the retail side, I think we're starting to see, for the segments that we bank, a lot of interest in the loan products that we have.
Okay. But then you know, market share is easy to lose, but notoriously difficult and expensive to grow back again. Now, industry loans growth, I think, expected to be around 6% for 2024. Is HSBC going to be in line with that number?
I think we intend to do that. I don't think that we want to necessarily see loss of market share. But again, it's not so much us wanting to maintain a certain market share. It is really about banking the customers that we bank, ensuring that we fulfill their needs. And with that, I think we're seeing our customers, especially on the business side, a lot of growth is coming through, a lot of investment is coming through, and we're able to take advantage of that.
And you don't have to be price competitive, because you say you're a foreign bank, you have international reach, but a lot of other banks will also say that, and you're not the only foreign bank in town. No, you're absolutely right. I don't think there is an issue here where pricing differentials can be sort of defended over the long term. It is a competitive market in that sense. And I think from our perspective, we are in line with market and most of our products. But I think what we bring to bear is this added dimension of being able to offer our global expertise, our suite of products that perhaps may not be seen with other sort of banks in Malaysia, and that creates a bit of a difference. And on top of that, of course, as you mentioned at the top of the show, you talked about fee income being a key element of that revenue growth, and that's the other lever that we have, I guess, to drive growth. Okay, we're going to come to fee income though, but I do want to talk about one important segment, and that is wealth management. Every bank in town is fighting for this. Yeah. It's extremely competitive, and it's equally important in HSBC, enough for Malaysia to have a mention in the group's 2023 annual report, which says that this country is in the top 11 markets, right? Yeah. But how do you differentiate yourself from the competition here in Malaysia?
Well, first, 2 points, I guess. One, obviously, it's a compliment to the customers in the sense that they have a lot of choice coming available into the market. And secondly, I guess it's also a compliment to Malaysia in terms of where we stand in the global sort of picture, that the country is doing relatively well. Yeah. That is a key focus for a lot of international banks and regional banks as well. In terms of HSBC, I come back to the point, at our heart, we are an international bank focused on trade and commerce as well as wealth. And in that respect, I think we're able to bring to bear that global experience, the global suite of products that really, I think, set us apart from the rest of
But what segment do you focus on? Because even within wealth management, right, there really is so many types. Well, different banks group it differently. So what is your focus?
So for us, we do the full suite of wealth banking. And again, it's tailored to the segments that we bank. So for example, we have a premier class of customers, and we've just launched Premier Elite, which is again focusing on a higher level of high net worth individuals and providing them with a lot more lifestyle and wealth products. So again, it's about tailoring the right sort of suite of stuff that makes sense to the customers. And we find that over time, we've been able to carve out a good set of customers that follow us and bank with us because of the products that we offer.
Okay, so it doesn't matter whether you've got the likes of all these private banks flying into Malaysia on the week, over the week, they come in from Singapore, they come in from Hong Kong. Is that your competition? Or is your competition more like the presence of UOB in Malaysia, or OCBC, or even Maybank, RHB, all trying to do wealth management?
No, I can't possibly comment about the sort of suitcase bankers that you talk about. I'm sure that doesn't happen in the regulated Malaysian industry. But more seriously, I think definitely, as I said earlier to the question, I do feel that it complements the customer base in Malaysia, that they have so much choice coming to bear into the market. And again, in that sense, for me, yes, it is always trying to gain the customer's attention, wallet share and all of that. But the reality is, I think if we put our best foot forward as HSBC, and as we've done so many, many years, we have demonstrated that we're able to.
Do you know your market share though? Because it's really difficult to find out this independent data. Do you know where you rank actually?
Well, it depends what you define market share, right? How long is a piece of string? I think from our perspective, again, we're clear on the market segment that we are targeting, and we've identified that.
Do you have a target though? Like, what is do you want to double your assets under management within a certain period? What's your KPI for this important segment?
I think we do expect material growth in the wealth segment for Malaysia. As you said, it's outlined in our group annual report as being a key market. So again, it's possibly above market growth in that area. And we do expect to have a significant following over the next couple of years. It will be in the market a lot. I think you'll see that.
Thunder, lightning and the thunder, 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 feel the thunder, lightning and the thunder, thunder. Malaysia's #1 5G network with you mobile.
Now, Omar, when we look at the bank and, the result season just over, and I got to have a look at, of course, all the listed local players, and I did see an uptick in cost for some of them. Now, I'm wondering whether it's the same for you, because whether there's a fight for talent, or is customer acquisition cost on the rise, and even shock horror, Public Bank did see higher OPEX thanks to salaries. So even for 2023, HSBC did see a rise in operating expenses. Is the trend continuing in 2024?
I think that's the very nature of all economies. I think inflation is real, and we do see costs increasing. I think the key thing for a lot of us in the banking industry is about managing the increase.
Yeah.
And also, of course, looking at improving efficiency and productivity so that we can maintain a cost-income ratio that makes sense.
So what is the cost-income ratio that makes sense for you? Because for 2023, it was 48.9%. And just for reference, the lowest in the industry is Public Bank at a shock horror 35%. So what's the target at HSBC?
I think our targets are in line with what our group has talked about in terms of having a reasonable sort of cost-income ratio that's in line with our peer group globally.
Which is?
I think it's around the sort of sub 50 mark. And again, that's something that's been put out in the public domain many times. So from our perspective, I think...
Are you there already? Because you're at 48.9.
Well, there are two elements to that, right? I think, of course, income is very important. So if you do not grow your income, or you're not realizing full productivity, that cost-income ratio can creep up. But also in coming back to looking at the costs, as you pointed out, there are many, many sort of pressures, whether it's talent, whether it's technology investment, all of that. I think it's about making sure that we make the right choices and manage that well, so that we can have a reasonable sort of cost-income ratio, which translates to a relatively reasonable return on tangible equity.
But are your hands slightly tied? Because I did a bit of digging, because much of this cost that you do suffer from or do have to pay for is due to this hefty intercompany service charges for shared services and centralized costs. And I think it comes to a tune of 827 million, which is 44% of other operating expenses. You can't get rid of this, can you?
No, I think it's a fair call out. But again, when you stand back and look at our cost-income ratio, I think it's in line with the Malaysian industry and, of course, at the global level. So what we have in Malaysia is a model where we balance local cost base with a group supplied shared service cost base.
Would it be cheaper to do more stuff back home?
Well, we take advantage of global investments. We take advantage of scale economies that are realized at the group, whether it's huge technological investments or whether it's even in terms of processes whereby we're able to sort of amalgamate a lot more elements that can be processed more efficiently. So I think we have the right balance at the moment.
So you're happy with paying group 827 million?
Well, again, it's
not choice.
Well, it's not so much a choice. I think, again, it's about value for money. And I think we've gone through a lot of business cases, analysis, and so on and so forth. And we do feel that we are getting the right value for money vis-a-vis the services being provided.
All right, I'm going to be talking about non-interest earnings, right? And that's what, typically 40% of your overall earnings. So let's start with fee income. That's one portion. Sizable, 377 million ringgit last year, and even 125 million this quarter. Wow, very good. And in particular, agency, which, correct me if I'm wrong, is actually related to wealth management. So it gives me an indication of how well that's doing. That's doubled to 51 million in 2023 because I don't see a breakdown in the first quarter. So can you still have the same pace of growth? Is non-interest earnings going to be still so good?
No, definitely. I think when you look at any sort of bank where we have to earn a return, as you have put it quite clearly within the show, there is to some extent a ceiling as to how much you can earn from a interest income perspective, given the competitive industry that we operate in. And so fee income is a very sort of key pillar in terms of ensuring that we get the right return. And it's also a measure of the products that we bring to bear and the ability of us to sort of fulfill the customer's needs. So from our perspective, especially as you've called out the numbers, we do feel strongly that we're able to deliver something that customers want, we do see the growth coming.
Is this where you really can take advantage of being an international bank? Because if I look at the earnings of the Singapore-listed banks, UOB, DBS, OCBC, they do have a sizable fee income transacting for regional businesses. Is that something perhaps you're not capitalizing enough on in HSBC Malaysia?
Well, a couple of things. I think, to be fair, when we look at comparables, there is a definitional point that we need to deep dive on. I think it's not exactly like for like, as in certain sort of companies classify fee income differently versus others. So it's not a apples to apples comparison. Having said that, I do feel that we have a lot that we sort of bring to bear to the market that's different because of our global franchise. I think similar to some of the other global banks as well, whether it's cash management and the corporate side, or trade facilitation, or even internet banking on the retail side.
Or US dollar clearing, something as simple as that.
Absolutely.
Yeah. Okay, as for net trading income, okay, this part's interesting. So volatility was great. Banks like it. You made exceptional income in 2022 and 2023. But what about 2024? Because so far, even from an MGS yield perspective, it's been boring, and boring is bad for a trading desk, right, Omar?
Well, you're an ex-fund manager, Xiaoning, so I think you're familiar with the industry. Again, I come back to the point. I think we take a long view of things. And the one thing I think that's consistent with other banks when it comes to treasury and markets, we do look at it as a diversified portfolio. Trading is not the be-all and end-all. Obviously,
but it's the cream on the sundae, right?
That's one way of putting it. That's fair enough. But again, there are many opportunities for it. But again, I think in the world that we operate today, trading is again meant to be in line with the customer needs. We don't have a prop book per se. So we do see continuous sort of opportunities with customers, working with customers to find elements that make sense. And we do sort of look at a sort of optimistic outlook for our overall trading and treasury and markets income for the year.
And Omar, how much attention do you pay to league tables? Because Bank Negara has this league tables. They look at the FX market, they look at the secondary bond market. You rank quite high. FX, you're third. And I think for secondary, you're fourth, although you used to be third. Is there a KPI within the bank? Have you cracked the whip at the Treasury boys? Come on, we need to, move up these league tables. Not just the boys, but the ladies, of course, also.
No, that's a very good question. I like the point they added ladies there, because we are very, into diversity and inclusion. So that's a very important point. Coming back to the issue of league tables, again, I keep repeating this theme. I think we take a long-term view of life, and what's important for us is ensuring that things are done.
So, in other words, these league tables don't matter?
Well, things are done, they have to be done with the right risk appetite in mind, and the right objectives that you're pursuing, so that you get the right outcomes. So league tables are a good point of reference, but they can't be the be-all and end-all of how we operate.
That's when you're not the first.
Well, that's a fair point. But again, for me, it's about driving what matters, which is what customers need. I think we've seen in the banking industry many circumstances where pursuing the wrong targets leads to bad outcomes. For example, mis-selling of products and so on. So from our perspective, we punch above our weight. We're a relatively small bank in the market in Malaysia. We have an outsized influence in the international side of things, obviously. But because that we're able to deliver solid solutions to our customers, which is why I think we have that standing in the league table.
Okay. And then you also are very vocal, at least HSBC Group, very vocal in terms of ESG goals. And there are targets of being net zero in operations and supply chain by 2030, right? Supporting customers in their transition, and I think you're even providing globally customers between 750 billion US to 1 trillion to achieve that goal. But I'm going to ask you whether, from a Malaysian perspective, is it painful from a P&L point of view to walk away from some clients which, because of the nature of the business, cannot make their transition? Because you have a 140-year-old legacy. Many clients would be old economy, and not all can make that journey with you.
No, that is a fair point.
Turning now business painful, right, Omar?
No, not at all. I think at the end of the day, the reality is we have stakeholders within HSBC and of course outside HSBC that we are accountable to. And the direction that we've chosen, we've just launched our net zero transition plan this January. It's been published this year, which states very clearly our commitment to wanting to transition with our customers.
But so what about the customers who can't? So if they can, great. I'm sure, you're not going to take away the umbrella. But for those who can't?
No, I think we have to make choices where we need to. And I think
even to the detriment of the shareholders? I mean...
Well, I don't think we want to do anything without due regard and due care. So in any instance where we do have to part ways, we always look at a proper, well, if you will, transition plan for our customers. I think the worst thing to do is to put the customers out without, as I said, due regard for their circumstances.
So how much of your book have you had to say goodbye to transition out?
Well, again, I don't think it's large. As you've seen with our track record in terms of our numbers in the past, I think we've continued to maintain a solid asset book and we continue to grow going forward. So the focus remains about wanting to help customers transition, and the bulk of our customers are looking towards that. Because I saw this quote recently, transition and addressing the climate change is not optional, it is existential. So everybody gets that, whether you the imperative is from a supply chain perspective or whether you yourself have that own realization, it has to be done. And banks like HSBC, I think we are at the forefront in wanting to help and being able to help customers down that journey.
Okay, in the meantime, let's talk about expectations and KPIs, right? Malaysia is 13th largest to the group in terms of customer assets at 15 billion US dollars. Top is, of course, Hong Kong, followed by UK and even Singapore. They're fourth. Is there a goal to be more meaningful to the group? Omar, what is the KPI set for you?
That's a fair point. I think it all comes down to the return on tangible equity. I think that's the first jumping off point.
What is your ROE target? Next question.
So we've seen the group come out. I think it's the low to mid teens as guidance going forward, and that's exactly what we all try to do to maintain that level of return, to justify the bank's view of things. And to be fair to HSBC Group, they view Asia and specifically ASEAN, and of course Malaysia as growth engines going forward. So in that sense, I think we are very optimistic as to where HSBC Malaysia can grow. We are not looking to lend and grow recklessly, as I've said, but just staying in line with the market, staying in line with our customers.
So you're happy to be 13?
Well, it's not so much, again,
I'm going to play the
tables.
Asian parent, right?
No.
13 is like,
It's a fair point. Again, league tables and all these measurements have to be done in a way that's right, in a way that pursues the right outcomes. So the first guiding principle is return on tangible equity, which takes into account our risk appetite, which takes into account, not going out and doing loans for the sake of doing them and ending up with a lot of ECLs and all that sort of thing.
You don't want to provide, right? That's also painful. Any provisioning.
Again, it's about sort of lending smartly and efficiently, and of course meeting the customer's needs. So being able to sort of deliver to that, I think
every
that's
bank
the key goal.
says that mantra though, but I'm going to ask you this question.
Sure.
Is it now harder to rest on your laurels as one of the foreign banks in the country? Of course, you've got all the advantages we talked about, global banking products, US dollar clearing, regional treasury services. But aren't the Singaporean banks in Malaysia also giving you a run for their money? Especially we've got this larger UOB entity on your back. Or maybe they're in front of you.
Well, again, I think to come back to HSBC, we are very focused in terms of meeting the needs of our customers. One of our strategic pillars is focusing on our strengths. And I think we do not take that lightly. I think the only way for us to have been in the country for 40 years and continue to do so is for us to be able to match the needs of our customers, to be competitive,
Not innovative?
And innovative, of course. And that's part of being competitive, right? You have to be able to differentiate yourself from the pack in that sense. So I'm very comfortable with the fact that there are many banks in Malaysia. As I said, it's a compliment to the country, it's a compliment to the customers that many banks are here.
On that note, thank you for your time. Today on The Breakfast Grille was Dato Omar Siddiq, CEO of HSBC Malaysia. I'm Wong Xiaoning, BFM 89.9.